Astro family, what's going on? Hope you all doing well. Marco here with another video. Thought I'd jump straight into the dollar. Now, Trump has taken center stage this week as he has obviously stated that he has the power to open up America whenever he likes, and he has now recently withdrawn funding for the World Health Organization, stating the fact that they obviously held back how serious this whole pandemic was to the world, and that is one of the main reasons why we are where we are. Now, that has obviously shown a lot of light onto the dollar, stating that he will do whatever he wants, and his main focus is to bring the dollar back up. Okay, bring the currency and bring the economy back up. Now, we have obviously seen this push into the dollar. So I'm very, how do I say, 50-50, or I'm going to split bias currently on the dollar. Now, just using a bit of technical analysis, two things that can play out, in my opinion. So there could be two sorts of Fibonacci's in play here. Okay, so we did have that nice sharp decline from about 103, selling ourselves straight to 98.40, where we did have that retracement. Now, we did have a rejection in and around 100, 101, okay, where we did see that decline to around 98.80. Now, we have seen this correction, and this is purely off the fact of what's been happening. So, as traders and just as analysts as well, just looking at the chart, we need to be open-minded and just realize that the way the markets are right now, anything can change. Okay, so we have seen this push up, and we are resting at around 99.50 right now. So two sort of scenarios, and I am being open-minded with this right now. Okay, we could see a pop up into this nice little arrow that I have highlighted, which in return would be a small little lower time frame fib. Okay, from previous swing point high to low, which lines up nicely with that 100 round psych level for us to then look for shorts. For me personally, this is what I'm leaning more towards, purely for the fact of, America is over 500,000 cases. Now, that is spreading, where there is rumors currently that the number of affected cases in some parts is slowing down in America, and we know very well in Europe. In terms of Europe, we know that the UK could be taking center stage, as some analysts have predicted that the UK will be the worst affected country inside of the Eurozone. So, with that, obviously, that bit of optimism there stating that some parts of Europe is slowing down, and that China is back to normal. Parts of America's affected cases is slowing down. We know New York is the worst affected. However, we have now seen this bullish momentum follow through. So, if the situation worsens, okay, which personally I do think it will, things are going to get worse before they get better as we price things in and trade in. So we need to do with politics and macroeconomics as well. So we're pricing in the fact that yes, things may be getting better. Now that could be an intraday push for the dollar, okay? So a retracement on the dollar crosses, or is this now a reversal back for the dollar to see us head back to that 102? So now I'll briefly explain why I say that to about 102. Because if we do form now a nice little bullish reversal on the day, so I am personally waiting for the daily closure to form before I take any decisions on this. Now, we could have a Fibonacci from low to high. Now, if we look at the daily, we can obviously see that, yes, price currently is engulfing the prior day, which is important, yes, but we do know that there's still 14 hours throughout the day. Moving averages have briefly crossed to the downside, so it could be a case of, yes, we're popping up to retest this nice liquidity region before dropping lower. However, I'm staying open-minded, traders, as we do know that on the weekly, technically, price is still bullish. We have had this big tweezer type shooting star bearish engulfing. However, market just keeps bouncing off this moving average. So, is it a case of things are getting better now in the States? Okay, and the dollar does remain strong. What am I looking for? So, in terms of capitalizing this week, like personally, I've been taking it week by week. I'm not looking to hold trades for 2-3 weeks, as we know the sentiment can change, right? So, in terms of buying the dollar back up, I'm going to be looking for a strong daily closure, okay? And I'm going to wait till we breach this sort of 99.80 level. I'm going to wait for some sort of retracement back into this 99.50 region, as that will more than likely occur. Now, if you know me, you know I like fibs quite a lot. So you know that from the significant low that we have printed to the high that I expect to happen at around this previous area of liquidity here. And we can see a retracement back into 99.50 before then, taking a long on the dollar. So when I say a long on the dollar, then yes, you are looking for dollar cross shorts. Okay, so let's jump into the crosses and actually see what we can come up with. Now, bear in mind, my bias on this currently is purely waiting for the daily closure and waiting for further confirmations. Actually, potentially in the New York session, we could have some sort of commentary from Trump again, which could there again change the whole sentiment. So there again, I am 50-50, and this level in and around 100 is very, very crucial to my bias. So that's the dollar index. Dollar yen. Now, we have been riding dollar yen out for quite some time, and I might just switch to the color candles as I have received quite a few questions, and a lot of people have different feelings to the color candles. So looking at this, I might just swap in between the two so everyone can benefit from this. So we have now spiked into, and I know quite a few people on my Instagram have been writing this down with me. Now we have sold ourselves into about 107, 150, nice little round level, in and around 107 for dollar yen. I think we came into that, yeah, tapped into 107. Now we are having some sort of bullish reversal on the 4 hour. Now, traders, like I told you, I'm taking things week by week. Now, if I do see this momentum for the dollar continuing to hold, then I am going to be waiting for a daily close. Now, a daily closure from this level, we can see if we go back in time, this has been an important level before in the past. Now, back to the 4 hour. Basic technical analysis, we have some nice spinning tops there showing us exhaustion and slowdown in price. Okay, we've had a nice little bullish engulfing. Buyers coming back into the dollar, and we have seen a sellout of the safe haven since Donald Trump's comments. So, there again, what I will be looking for, okay, now on a 30-minute, we have potentially broken structure, right? Now, remember, you don't want to be buying on the impulse, okay? The worst thing you can do is buy on the impulse because there's absolutely no risk to reward right now. So the 4 hour closure in the next, let's say 4 minutes is quite imperative to my bias on this. However, if you are looking to take a little intraday position on this, then I am looking for price to tap back into 107.200, okay? Now this does align with dollar strength. Now I'm looking at a 20 or 30 pip stop, and I'm looking to take this back. Let's look on the 4 hour. I'm looking to take this back to about 108.200 intraday, okay? So that's still a good 100 pip trade, almost a 5-to-1 risk to reward. Now that's purely for the fact of just looking at dollar yen, we're bouncing off in and around 107 round cycle level, okay? Multiple wicks through that. We are showing bullish momentum coming back into that. We've seen the dollar index showing signs. We know that Donald Trump is obviously running around saying that he can open America whenever he wants. So, is it a case of he potentially knows something that we don't? And are we going to see that momentum follow through for the dollar? So, in terms of an intraday trade, it's still a great trade, 100 pips. We know the volume has been quite high with all this going on. So, I am looking to take advantage of that today. Let's take a look at dollar Swiss. Now, caught a little intraday trade there with one of my students on the one-on-one. However, you need to be fluid. You need to learn how to adapt. We have now had this bearish closure yesterday, breaking this area of liquidity, which I had drawn on. It's a nice little turning point there on the day. We have now popped up to retest that. But if there is now money flowing out of safe havens, what is that doing to the Swiss? Therefore, traders, that's weakening the Swiss, and we have seen money flowing back into the dollar. So, now, I know your average trader is going to look for a retest of this previous support broken, our resistance to then take a short. Don't get me wrong, that trade might pan out. However, like I mentioned, I am being open-minded to what can happen. So very similar to the dollar, which this is very mirrored to the dollar. I am looking for a breakout of this, in my opinion. A breakout of this, a retest of that. And then we could look for some sort of correction back to the upside. So around, I'd say 98 is its first point of call. Nice little round cycle level. So if we were to have that sort of correction play out, bear in mind, traders, we want this high breached, okay? Before we can even look for a retracement back into these levels. So if we just put that on the bodies, perfect. And there again, we use our fibs from significant low up to significant high. there again, even if we get a retracement back into this area of liquidity, that'll be a great place for you to buy from. If you're taking this to your fib target, you still have a good risk reward. However, I do think we can tap into that 98. Now, there again, I'm keeping this 50-50. We don't know what can happen. So, even if you do take this trade upon a breakout and a retest of this, I'll be monitoring around 97.50. We know that is a good area of liquidity. But so far, I think dollar yen is showing the highest signs of reversal. Euro dollar, I actually took a long on this. I am in still one position, which is a break even over here. Took a bit off the table. However, there again, this is all dollar dependent now. So let's get rid of this and just realize what's been happening now. So on the 4 hour, let's say, we've had 1, 2, 3 drives into the high. Okay, there again, I'm being very, very cautious as to what can happen, as I do know there is a potential fib from significant previous high to significant low, where we are having that slowdown in price now. We did go for that higher retest into that 78.6. Now, in order to take a short on this, there again, let me cater for everyone and change back to the black candles. Now, in order to obviously take a short on this, you can put your old classic trend line on there. Okay, we have had a break of that now, but based on the dollar, based on what I'm thinking right now, I am looking for a breakout of previous lows. Now, we obviously have had a nice little spinning top on the hourly, so that does mean we are in line for some sort of correction. So, if we do see further strength for the dollar later today, then we can expect some sort of correction back into, in my opinion, 109.600 before then having a short. However, traders, don't be fooled, okay? You can wait for a break out of these previous lows. The market is always going to present itself with a retracement. So if we do have that sellout and we do have a nice little bullish closure on the day on the dollar index, then yes, we can see this sort of play occur where we're breaking structure, making a new low, potentially around first point of call, I'd say 108.400, as this has been a previous area of liquidity. Remember, you always want to ask yourself, where can price go? How do we do that? By looking left. So we have, well, this is potentially what we are expecting, back into that 108.400, waiting for that retest before going lower. Don't get me wrong, traders, the daily, extremely, extremely bullish. However, we know current market conditions, it can do whatever it wants. The market doesn't have to do what we want. So if we do have that closure, it will be a nice little bearish engulfing on the day. However, if we do reverse, and there again, I'll play it by ear and play it by eye and just see what happens around here. However, currently no trade. I am obviously waiting for some sort of correction before then gauging where we're heading next. There again, dollar yen still on top of my radar. Dollar CAD, I was expecting further downside. However, we have seen a further push down in oil. All you do now is you have to adapt. So daily time frame, very indecisive, right? We know that multiple wicks on the daily is indecision, which technically is consolidation on the lower time frame. Drop to the 4 hour, price is just going sideways. So what I expect for this to happen now, we have had a nice little bullish closure on this. Okay, I know oil's down. I'll take a look at oil in a minute. However, moving averages crossing back to the upside. So what I could potentially see, some sort of correction like that. If we just go to a 30 minute, I'll show you. Perfect. It's very similar to dollar yen. We have had that break of previous highs. Okay, we know the buyers are coming back in. This, there again, traders, is now the impulsive move. You do not want to be buying on the impulse. Okay, risk reward is in there. Simply wait for some sort of slowdown in price. Wait for a correction. Wait for a pullback. I know the 61.8 lines up with previous levels of resistance. So if we do get that retracement, then I might look at a dollar CAD long intraday. However, nothing's in stone yet. I am obviously just waiting to see how price reacts. Remember, traders, and I speak about this all the time, not taking a trade that looks really, really good is actually one of the most highly acquired skills in trading. Whereas if you see a trade and you want to jump into every single trade, then it's just not going to work out well for you. So just bear in mind, a lot of trades are playing out. We just need to obviously see now how they work out in our favor. So Let's take a look at cable. Now, cable has been extremely bullish. We had a nice little bullish closure yesterday, okay, spiking into around close to 126,500, which is a nice little psych level. Okay, we have now seen that push down there again because of the dollar. So, two things that can happen now on cable. If the UK becomes the worst affected country in Europe, and we do see a further decline in the whole economy stance, then we can see the pound rolling over, okay, with the dollar potentially gaining strength. So how do we take advantage of this? Now, we have had this nice little 4-hour closure back below 125,300. So would it be a case of, okay, I'm going to wait for some sort of correction before then sell it? Yes, you can potentially. Now, we have briefly taken out this low. So what I would suggest is you can put your fib on from high down to low, await some sort of retracement. Now, there again, if you're happy to sell on the 4-hour close, then yes, you can do that. However, I would like to see some sort of pop up in price, as we have seen a big decline of over 100 pips now to the downside. I know we 100 pips down on the day. Now, I do not want to be selling now, okay? I want to be looking for some sort of correction, even if we come and revisit that sort of level there, okay? Giving us a nice little head and shoulders before then rolling over. That'll be great. Worst case scenario, traders, we fall lower, fall into this area of previous resistance broken, now potentially support, and then gauge what could price do from there. It might be a case of that dollar strength does follow through, have a retest into that region, before then selling ourselves back to about, I'd say 122,500 would be my first point of call if we do go south. However, I will be monitoring price in and around this 124,500 region. So that's cable. GA, very choppy if we can look at this price action over here. However, something that's caught my eye is definitely the daily time frame. So we've seen this price slowing down now. We've had 1, 2, 3. Now, bear in mind, indecision on the day, like I've reiterated time and time again, is just consolidation on the 4-hour and low volume. So if we look at that on a 4-hour, you can see the market is pretty much choppy, squeezing itself in, okay? Now, we have had a nice little bullish closure back above my zone. So what we can sort of expect is some sort of retracement back into these previous highs that were printed. So let me just draw that in. Cool. That's the retracement back into that. Okay, I know we have pinned to the moving average now, which more than likely will continue, to be honest, based on how bullish the 4-hour is. But that's not a problem, traders. So the daily is key. If the daily does hold like that, all you need to do, wait for a retracement back into this area of liquidity, which I have mapped out. So I'm going to keep this on the daily, as I don't know when price is going to reverse. We know GA is quite aggressive. And I'm looking to take this back to 2 flat. Now, that is obviously assisted with the Aussie dollar weakness, which we are seeing right now because of that dollar strength. So, a nice little retest of this area of liquidity around 197,300 will be a nice little 275 pip trade for 80 pip stop. If you're not used to using 80, 100 pip stops, just factor that into your lot size and just realize that it's better to give it a bit of breathing room right now and take a smaller position because you are gaining that overall in the reward of that trade as well. So that's GA. Gold, we have obviously broken through nicely of that 1700 level, and we are seeing that sort of correction now as the dollar is now gaining strength, so risk is back on. Now, I would like to see some sort of correction. So for this, I'm going to change back to the color candles so I can cater for everyone. Perfect. There we go. Now, there's a lot of blue on this page, just by the way. I'm sure you're thinking the same. So, level of resistance here. 1, 2, 3. I'll count that as 4. We had that break and that retest over there, which is pretty much brilliant. However, we are obviously seeing this correction now. So, 2 scenarios. Traders, if this does continue to pan out, things do get better, then it is risk on from now on, and we are going to see a deeper correction on gold. So let's get rid of this trend line. I actually had an order at 1625, however, we didn't have such a deep retracement into that. So 2 scenarios. Put our fib from low to high on the previous low point that we made. That 61.8 lines up perfectly with previous levels of resistance. Now, potentially support. So I'm not looking to short gold right now, to be honest. I mean, we can drop to the lower time frames and actually see what's available. If you're looking to take an intraday short on this, by all means, it doesn't look too bad. What I would say is wait for a retest of these sorts of levels. Put a fib on a lower time frame, which lines up perfectly. Go to 30-minute. Wait for that deeper retracement into these previous levels of support, broken our resistance. And yes, you could look for an intraday short. Let's map that out. 70, 80 pip stop. Take us back to 1700. You're looking at a good intraday position, 2.86, which there again lines up with dollar yen longs. So personally, I'm not looking to take this. I know it's very, very aggressive at the minute. So keep that on your watch list for potential long in and around 1680. Now, I'm not telling you to buy from there. We're obviously going to be gauging how price reacts. Okay, we're going to wait for that slowdown, wait for some sort of reversal in and around this region. We know that lines up with our dynamic area of support as well. So I'm going to be carefully monitoring that, seeing how price reacts around this level before then taking price higher. Our minus 27 lines up nicely with 1775, as well as if we zoom out on the weekly, we can actually see how 1800 was a major level. So I would like to see that being revisited in the near future with, in my opinion, provided the virus does continue to worsen, and yeah, we are going to see safe haven flows strengthen, but for now we are in correction territory. So that's gold. Oil, briefly mentioned. Now, we did spike into 20. Now, I don't have a lot of levels on this, but I'm keeping this plain and simple. If we look on a weekly time frame, we had this nice little turning point here at around 28, where we came to tap our heads on pretty much perfectly. Now, basic technical analysis, that is a beautiful reversal. However, we've shot straight back down into our level of support. Now, we are just resting on this level, okay, which most would class as a potential inverse head and shoulders. So if you were to have your fib from low to high, we are currently resting in that region. Now, I would have to see some sort of erratic bullish reversal from this region to then class it as a reversal. However, if that doesn't occur, then yes, new lows could be formed at around 18. But I'm being optimistic. I do think that we could see some sort of reversal now based on the production cut that was agreed on. However, we've got to trade it. We see not what we think, so I'm just patiently awaiting on some sort of correction from this region. Now, all my XRP fans, let's take a look at that. Tell me what you guys think. Drop a message in my DMs, and I'm going to get tons from this. Now, in my opinion, I know the weekly is slightly indecisive. Okay, we are resting below that moving average. However, nice little level here drawn on. Basic level of support. If you draw that slightly lower, we came into that. We had that reversal now off of that. Now we know that 18 cents fairly low. We know that we spiked to about 12. I know 12 was a very famous call in the office, so very well done, Singularity calls. Now we spiked to around 11,400, okay, on different tickers there, but we are obviously resting on this level. Now, I like how it looks in the daily, purely for the fact of we know that cryptos work well with dynamic areas of consolidation. What do I mean by that? 4-hour time frame, we do have this nice little triangle resting on 1832. So there is a fib in play. From significant low to significant high, we've had several bounces there. Now, in terms of taking a position on this or increasing your holdings, I would like to see a breakout of this, okay? In terms of increasing holdings, you wouldn't be really worried about stops, but first sort of target would be 22,500, which obviously gives us a good risk reward if you want to exchange, grow your holdings, things like that. But personally, I'm expecting 22,500 over the next coming weeks. So yeah, let's see if that matures. If it doesn't, guaranteed my DMs are going to pop, but it's all good. The Dow. Now, what do I expect for the Dow? So, just take that away. If we scroll back to the past sort of recession that we had, now, as you guys know, I'm a fan of Head and Shoulders. Now, 2008 recession was caused by a Head and Shoulders, nice little break of structure, perfect fib from high to low, and that's probably one of the best fibs I've ever seen in my life, right? Now, based on what's going on right now, we know that there's millions of jobless claims in the States. They're expecting up to 3 million unemployed in the UK as well. So yes, we are leading into a recession. Now, what I see over here, I see a major level of resistance around 26,600. So we've got 2 taps over there. We made that high, coming just shy of 30,000. Now, I was actually in the process of buying myself one of those 30,000 Dow caps, but I told myself I'm not going to jinx this, and guess what happened? 29, pretty much 29,600, 29,650, and that came just shy. So anyone who bought that 30,000 cap, yes, you're right, you did jinx it. So never buy it too soon. Okay, we made that high, 29,600, just shy of that 30k mark, round cycle level. Now we have seen this sort of correction. Now this is obviously coming from stimulus packages from the Fed and Trump being overpowering like he usually is, okay? But in my opinion, classic fib from high down to low. I'm expecting us to come and revisit that 26,000, 27,000 mark weekly. Extremely bullish. Now, in terms of taking a trade on this, just do factor the risk in with this. However, if price does pop up into that region, then I do think we are in line for the next big short. So we did have a big sell-off in price there, which was great for anyone who caught it. However, if you missed that, wait for this correction, which I'm pretty sure it will occur. And I'm looking to take this back to those 2008 highs that we made. So that takes us back to about 14,300, which will be a good trade, to be honest. So if you're willing to ride this out, the risk reward is there. So traders, that's it from me this week. I hope you enjoyed the video. If you have any questions, drop me a message on Insta and we'll gladly take it from there. Other than that, stay safe and yeah, I'll catch up with you guys soon. Take care. Bye-bye.